Hi everybody, this is going to be a video outlining the solution to the Activity 7 question on closing entries. I thought a little bit of background would be useful, so here goes. Closing entries have to do with real and nominal accounts. Real accounts are known as permanent accounts, nominal accounts are known as temporary accounts. Real or permanent accounts will not be closed at the end of a fiscal period. Nominal and temporary accounts will be closed at the end of a fiscal period. Examples of real or permanent accounts are assets, liabilities, and owner's equity. These accounts will have balances at the end of the fiscal period and are not closed. We will not touch those in the course of this question. Nominal or temporary accounts include revenue, expenses, and drawings. These accounts will be closed and will be given zero balances at the end of the fiscal period. This is your question for Activity 7, Manzini Delivery Service. The question states, given this adjusted trial balance in all these accounts, please perform the closing entries. Well, know what we just went through. Anything that is an asset like banks, prepaid insurance, or trucks will not be closed, and we're not going to touch those accounts. Anything like our liabilities, like accounts payable or bank loan, will also not be closed. G. Manzini Capital will also not be closed. However, drawings, the revenues, and all of these expenses are going to be closed in the closing entries. When I perform my closing entries, the very first thing that I close, and you should be closing too, are the revenue accounts. You'll notice the delivery revenue has a balance of $153,125 as a credit, and investment interest earned has $1,250 as a credit. When I come over to my spreadsheet, I'll reveal what my entry looked like. I debited the delivery revenue for $153,125, which is the opposite of what the balance is. It's the $153,125 credit. I need to debit that amount to the account to zero it out. There's nothing left in that account. It's a zero balance. Same with the investment interest earned at $1,250. What I do with that balance is I credit it to something called revenue and expense summary. This is a very temporary account that will last for 3 journal entries. That's it. It will only be used when we do closing entries, but we want to make sure that when we debit the amounts to the revenue accounts to give those zero balances here and here, we credit that to the revenue and expense summary. The next thing I would do is I would close out all of the expense accounts, and I'll show you how to do that when I reveal it. This time what I'm going to do is I'm going to use this account here, revenue and expense summary, but I'm going to debit it. Why do I debit it? For the total expenses amount, because all of these expenses here have to be credited because they all have debit amounts on the worksheet and under the trial balance. All of them have to be credited in order to zero out all of the accounts. And the grand total of all of those expenses is $140,331. That gets debited to the revenue and expense summary. So right now in the revenue and expense summary, there is a credit of $154,375 and a debit of $140,331. Immediately following that, we need to close out the revenue and expense summary account. I told you it wasn't going to last very long. The revenue and expense summary account gets debited for $14,044. And you're saying to yourself, where did the $14,044 come from? The $14,044 comes from the difference between the $154,375 credit we had and the $140,331 credit debit that we had. In order to make the revenue and expense summary a zero account, we have to debit the account for $14,044 because there is a $14,044 credit in the account. So to zero it out, we need to take basically what is net income. Your revenues minus your expenses, and your net income gets debited to the revenue and expense summary. If it were a net loss, we would be crediting the account because your expenses would be greater than your revenues. G. Manzini Capital would then get the credit for $14,044. So all of that in net income ends up in the capital account. The last journal entry that we're going to make is for drawings. What we'll do is we'll debit the capital for $7,540 and we'll credit the drawings account for $7,540 because the drawings account has a debit balance of $7,540. This credit here zeroes out that account and we put the amount to the capital account. Okay guys, I hope that explains it. Thanks for watching.